Hello traders, in this particular video we are going to be talking about the bullish hidden divergence. Now whether you have heard about divergence before or not, divergence is one of the most common concepts that happen in the Forex market when it comes to technical analysis. Yeah, divergence happens a lot, but if you are not familiar with it, do not worry, we are going to be discussing the bullish hidden divergence specifically in this video. Okay, so I'm going to be using the RSI, the relative strength index, because you can use other momentum indicators as well to spot hidden divergence, but in this video we are just going to be using the RSI. All right, um let us set this period back to the default 14. Okay, now to spot bullish hidden divergence, using the RSI, we have to look for a place when price is making higher lows while the RSI is making lower lows, right? Basically, and we can see that happening here. The price was making higher lows and the RSI was making lower lows. So that is what um, the the bullish hidden divergence mean. It happens when price is making higher lows, indicating a continuation of the uptrend, while the RSI is making lower lows, suggesting weakening momentum, but not a trend reversal. So this just shows that the momentum, the bullish momentum is getting weak. Doesn't necessarily mean that the price might reverse immediately, but if you are in a buy trend, like if you were in a buy trade, maybe a long buy trade, once you start noticing this signal, this bullish hidden divergence, in case of if you are not ready for a possible pullback, you might want to exit, or maybe you can trail your stop loss or something like that. Okay, now the hidden divergence is different from the regular divergence. Okay, regular divergence indicates a potential trend reversal, while hidden divergence signals trend continuation. Okay, it signals trend continuation. So in case of if you spot the hidden divergence, in case of if you spot the hidden divergence but you are just unsure of what the next price direction is, if you are not comfortable, you can exit the trade. However, you can also decide to trade your stop loss. But one thing to know is that when the hidden divergence forms, there is a chance that it is in a continuation, that the trend will continue, it might not reverse. When it is hidden divergence that form, there is a chance, it doesn't mean that it's always accurate, but there is a chance that the trend will continue. Okay, now we've already set up the RSI on our chart, and I've showed you an example. So we can see that, let's just zoom out a bit. We can see that the trend actually continued for a while after the hidden divergence formed, and then it took about, this was 20 o'clock on the 28th, on the 28th, 16 o'clock. Um, okay, this was 28:11, this was 4:12. So I think about a week later, yeah, about a week later was when the trend now reversed. So it did not reverse immediately. So if you are in a buy trade, you can still hold after seeing the hidden divergence. Yeah, because it's possible that the price will actually continue in the direction. If it was a regular divergence, that's when you might want to, be quick to exit. Okay. Now, when you are using the RSI to identify bullish hidden divergence, um, try as much as possible to you know observe the settings and make sure that the settings is correct. You might want to use the 14 period settings, which is the default. Use it, and you're going to see that the RSI is oscillating between 0 and 100. Typically, above 70 suggests overbought. We have been talking about this a lot of times in previous videos. This suggests oversold. But for hidden divergence, we are just going to be focusing on the direction of the lows rather than absolute value. So in hidden divergence, we are just focusing on the direction of the lows. You have to be seeing, for bullish hidden divergence, you have to be seeing lower lows in the RSI. Okay. Now, first of all, you have to identify the uptrend. Ensure that the market is in a clear uptrend. When you are looking for hidden bullish hidden divergence, make sure that the market is in a clear uptrend. Okay. Then after that, make sure that the price is forming higher lows, it's actually forming higher lows and higher highs. Like, there should be a bullish structure. And you know what a bullish structure is? Higher highs and higher lows, basically, is what we are referring to. Make sure that the price is forming higher highs and higher lows, showing that this is a bullish trend. Then once you have confirmed that it's a bullish trend, then you can then check for lower lows on the RSI. Okay, because an uptrend has to be confirmed. An uptrend has to be confirmed before you look for the divergence. Okay, an uptrend is confirmed when the price continues to move in an upward direction with pullbacks. Yeah, there have to be pullbacks. Where there is no pullbacks, then that trend might be suspicious. Okay, oh yeah, but there has to be pullbacks because price does not move in a straight line. So an uptrend is confirmed when the price continues to move in an upward direction with pullbacks, which is where hidden divergence can come in, right? Because when you have pullbacks, that's when you now start having, lows, right? Higher lows. Then you now look for lower lows on the RSI. When you now have lower lows on the RSI, that's when you now have your bullish hidden divergence, okay? So you have to check the RSI. When the price is making higher lows, check if the RSI is making lower lows, right? You can see this is a perfect example that we found here. If you notice that RSI is forming lower low during the price retracement, even though price is forming a higher low, this is your hidden divergence signal. The divergence tells you that although the momentum has temporarily weakened, which is the lower RSI value, telling you that the overall trend is still bullish and the price is likely to continue upward. So that is how it works. Okay, that is how it works. Now we are going to be looking at what to do when you spot the bullish heading divergence. So once you spot a bullish heading divergence, you can anticipate the uptrend to continue, right? The point at which the price forms the higher low and RSI forms the lower low is an ideal time to prepare for a potential entry. So when you notice that this higher low has formed, you can see I think this coincides with this. So once you notice this higher low and this lower low, right, you can enter a buy after this. You can enter a buy right after this. Okay, because once you've confirmed that the bullish trend is continuing after this low and low has formed, and you confirm that the bullish trend, you can now enter your buy trade. And as for your stop loss, you can set your stop loss just below the recent low, right? The recent low. If you enter here, make sure you set your stop loss below here. You might want to have a tight stop loss. Okay, then because this will help to protect your trade in case of if the trend unexpectedly reverses. Okay, yeah, hidden divergence doesn't always lead to a continuation. Of course, there are some cases where eventually it doesn't happen. So yeah, the forex markets can be really unpredictable sometimes. Okay, so especially if there's no clear uptrend, the hidden divergence may not always play out. So you might want to always combine it with other indicators, and price action, candlestick pattern, support and resistance levels. You might want to add moving averages as well, additional confirmation if you wish, just to ensure you get a stronger signal. So I hope you found this video insightful. Kindly like, subscribe, and click the notification bell so you don't miss out on more updates. Cheers and happy trading.